Good morning. Okay, finally a little bearish price action, at least at the open here. We'll see if it follows through. Yesterday was a day, most of the day, of watching the grass grow and it's chopping around into the close. You can see here, then I guess when it couldn't break down, there's some short covering, little blips, and that kind of maybe is the coffin nail this morning. For at least some kind of retracement here in the broader markets. Because as we look at this pattern of this sideways consolidation, and then the pop to the upside, right? Buyers step up there, short covering or buyers, whatever it is, longs coming in, and now we see it trading at around 229, which means a open below this consolidation. And with 2 bars sideways like that, gapping down below the low, or I guess right in the vicinity of that low. We'll see what happens. A few minutes. Pattern like this should keep going down. Well, that's the bias for now. We'll just see this pre-market action here if it actually breaks. Spiders, and got this whatever you call it, hangman, doji, open and close the same. We look at that as momentum coming to a screeching halt with a small candle body like that. And so it held support down here. And the depth of this retracement now changes things a bit from, this big move to the downside, relatively big move, big wide range bars, power bars to the downside. And it actually holds in a retracement of more than 100%, while doesn't eliminate the bias of a correction, but it moves things from down, right, to choppy sideways price action, which is not fun. Erratic type of price action. So we'll just have to see how this unfolds. But you can see here around 332.5, opening down below here, same bearish gap to the downside. And with a move having, lifted over several days, gapping up, leaving voids below, unfilled gaps, excuse me. We'll see how far it goes. That's what we do all the time, right? But right now, for today, this morning, the bias is that it's going to go lower based on gapping below this support and into the area of the low of this bar. And diamonds will probably be about the same. All right, you can see the same move from here to here, sideways, 223-ish, thereabout. All right, so gapping into a little support, maybe some jiggles, and then lower. And as always, 2 scenarios. If by some miracle it's able to rally back above this high, well, I don't think it can go much higher at this point, but that certainly would include some crazy whippy price action. So we'll see how it unfolds. Right now, this looks like it's heading at least somewhat to the downside. YM, do you love these names, Gravestone Doji? They're catchy, Alex. I mean, when you start marketing stuff and, I don't know, they say these Japanese rice traders 100 million years ago, trading rice, created these candlestick patterns. I don't know if they came up with these kind of names. Somebody translated Japanese into English and come up with those names, or some marketer created, I don't know, shooting stars, morning stars, haram eyes, piercing patterns, all pretty catchy stuff. So if you want to sell candlestick courses, I'm sure it does a great job at doing that. Anyway, we simplify things. Oh, that's a big bar. That's a little bar. It's a green one. It clears above the open. That's slowing momentum. Everything we do is, let's not give ourselves brain damage with names and indicators. Russell, 166.5-ish. And so again, 166 gapping below support. All right. leaving this overhead supply. So if this thing's going up and I'm long, right, who's ever long, and thinking, oh, that was a red bar, but the other markets did okay. I'm going to hang on to this overnight. I think maybe, the news will come out and it'll go higher and, blah, blah, blah. Well, now I'm rethinking, what did I do? It was that resistance. It was a red bar, let me just hope I get some kind of little retracement into here so I can get my money back. So that's this, the psychology of price patterns is, we look at what's going on where we say, oh, here's a breakout failure and a base and so on. Well, what are the people thinking that created this? If I was in here, I'd be thinking, hey, I'm going to sell a 5-minute bars low if this thing can't rally back up here. Show me some ability to regain the upside here or I'm gone. And so with a pattern like this, if it cannot go right back up, it should go down. We'll see. You got a big hole over here, right, from the gap up. So that's what we'll be watching for. Transports, we covered the fact that the breakout failed. It held support. And so now we will see what this nice big green bar looks like at the end of today, based on, you don't get much, or sometimes you do, but, you typically get pre-market information on this ETF. But if this, by the end of the day, looks like a topping tail bar, well, next week, that suggests it's going down, maybe to the bottom of the base. So we'll see what this looks like at the end of the day, how far the transports come in. Futures. Well, you can see it's just trading right now, trading below this bar. So that's why we look at futures. We can see a complete bar. We look at the ETFs and we can see, futures are trading down here. That means the ETF is going to gap below low or down to the low of a bar after 4 up days. Historically, that leads to lower prices, right? Common sense. The NQs holding up better. They're not down at the low, but you can see this whippy price action as the jobs report came out. It was down and kind of flips up. And what does that mean? Well, it means that there are a bunch of sellers sitting up here aggressively looking to pound the bid. And they did after the initial push up, because it came down real hard, right? The speed at which prices moved, big bars. So more information to suggest it's going lower. So Dow, similar. You can see the price action down here. And again, little peekaboo above the high. That's a strong move off the low. No one's going to, dispute that. And come down here and running back up like that. But big moves down, big moves up. Tops are created by wild, whippy price action. Now, to really get, some kind of correction, let's say ugly price action going, well, it's going to have to break below down here. That isn't going to happen today. So we'll go into next week and we'll see, now that prices have retraced this far, do we get choppy price action up at the highs here, which would be a positive, right? If prices can't drop very far. But if it starts to retrace way down here, well, again, the depth of retracement is going to tell us a lot of information about the probability of breaking down here or potentially going up to 30,000. Right now, for today, we've got some bearish gaps, which suggest lower. And you can see the pullback here in the Russell, and not your classic head and shoulders kind of a top for sure, because of the depth of this move down. What do you call this? I guess if I was drawing diagonal lines, I might call it a broadening pattern, which is supposed to be bearish. But since I don't draw diagonal lines because I think it's ridiculous projecting lines into the future, I'll just call it wild and whippy. right? Breakout failure, breakdown failure. It's in the middle of this move thereabouts, and we'll see how far it goes down here. Oil, down at the bottom of the range, trying to hold on here. It's kind of like on the edge of the cliff, and you know, its fingernails kind of hanging on in there, and we'll see. It's supposed to bounce. I haven't, by the way, on TC 2000 gap scanners, Gap, the way we have it set up works really well, but TC 2000 doesn't give us the pre-market data to update the scan. However, they said that is coming on the next update. I haven't seen such yet. Really want to see that. Bonds pushing up. Of course, you know, market's pushing down. It's been the opposite there. And, you know, suggest. So if we're looking at this with a bias that this sloping downward corrective action and this little retest pattern down here on the weekly chart supports a bias that bond prices can at least get up to here, if not even higher, that is supportive of looking for the market to go lower, because that's had this inverse relationship. And so that's one piece of information besides just the price action on the broader market indices to support that prices can go lower. We don't usually look at this pre-market, but you know, the volatility index, you want to keep an eye on that. If this now should start to push up, and you want to keep an eye on your reference points up here. We don't know how high it'll go if the markets do move lower, but you want to have alerts at these prior highs for possible turning points, right? Whether it's intraday or if it really spiked, maybe from an intermediate term perspective, being aware of those levels be very helpful to you. And gold is up, of course, as the market is down. We believe this is going to go higher. It's kind of sloppy here. It's kind of sloppy wide consolidation that's been going on. So again, another inverse relationship that's been going on lately, where gold and bonds have been going up and the markets have been going down. And in turn, if bonds are going up, that means interest rates are going down. We could look, I don't know if this updates in real time. Yeah, you can see the 10-year is going lower. And so what we need to keep an eye on, let me see where I put that, if I can find it. There we go. I showed this at the beginning of the week. And now, and this updates, this may actually be below the inverted line of the 3-month versus the 10-year. You know, the media mostly quotes the 2-year versus the 10-year, but the deterioration starts in the lower months. And so I keep an eye on them. So the 3-month versus the 5-year is already inverted, right? This all started with this virus thing and the slowing economy thing. So with bonds moving up, yields moving down, this may invert, and then we'll just see if that eventually, you know, this is the most distant 3-month versus the 30. You can see this is down at what I call the warning line. If this starts to inch down, you're going to start hearing the recession fears again that we went through last year, which lined up with the sideways choppy price action throughout the middle of the year. So we'll be keeping an eye on this and reading the tea leaves as we do. And after that, let me just go back to my old page here. And with that being said, I think I've covered everything. Right, Dan? Oh, you know, just as a side note, last week, one of the biggest, if not the biggest loser, was what has been the biggest winner. You know, semiconductors got shellacked big time. And so now they've retraced up. And, you know, when the winners start getting sold, you got to really watch that. So I think, Paul, for our 0 day to expiration XPX trade, gapping below here. We give this, a few minutes or so. And above here, if we can get up to 33.80-ish. All right, I did one yesterday. Would have worked out if I held it. It was 33.70, 33.90. And the markets wouldn't drop yesterday. So, I took the change and moved on to today's another day. And you held it. That's why you're McGraw. I don't have your stones, let's just say. So anyway, this looks like a good new trade for up above here. And I don't know the downside, but if we can get something below, let's just say 32.80, I think that would be safe. I don't know if there'll be any premium there, but we'll see how that unfolds. All right. So for our 0 day to expiration SPX trade. All right, everybody. That's it for me. Dan, it's all yours.
All right, thanks. Yeah, I already posted an alert to our weekly options creators saying that's exactly on my radar today. Shorting a either Spider or SPX call spread, perfectly set up for it. And we actually have this upside shakeout, I guess, on the employment numbers coming out. Now it's a shakeout, 100% retracement now. So that makes it even better. Or as McGraw would say on the plantation, more better. All our opens look fine. Tesla gapping down a little bit. We have a call spread, the 690s, which as you can see, is yesterday's low. So hopefully that'll hold right there. We have a covered call in Lyft as a core trade, and it's gapping up a little bit on the heels of Uber. What else? I see gapping down a little bit. We have it. We covered half already with a tightened stop for half, and it's whipping around here pre-market. But we have a beautiful open gain. This was a 1, 2, 3, 4. So we entered over this bar, 135 and change. So we have a monster open gain. So that one's going to be fine. Cool, we never got filled on a bear call credit spread, but I still want to keep an eye on it. Serve, we shorted yesterday, BTU, I'm watching for 1, 2, 3. I would love another inside day and then for it to trigger on a Monday. NYCB, we posted as a short yesterday, under yesterday's low. Boeing, we have a put spread, we covered half into strength. And those are just a couple comments. I'm glancing at our opens here. The Greg's Coffee Shop, Lima Kilo, looks like a day trade short plus I posted yesterday as a bear call credit spread. Let's go over to gappers now. Exactly, more better. COLL, C-O-L-L, 24 bucks. Big bullish gap, but it needs time to consolidate. This was an IPO yesterday that got shellacked. Look at that big old topping tail closing under the open. But this 15-minute chart is a double bottom. It's a retest. So for a day trade, that might perk. Y10, 1338. Big gap. Wow, this thing trades weird. What is this thing? Is it Chinese? Wow, I just noticed the prices. Wow. Look at that, $70,000. So that obviously had a ton of reverse splits. Here's a new IPO yesterday. Zen gap into 83.50, a bearish gap, but no pattern quite yet. Goose slopping around, that looks like earnings, 31 bucks. That's a bearish gap in a downtrend. So maybe 30-minute low or a call spread. This got killed after the market yesterday, so that must be earnings. stabilizing here, but that's power. That's power. I'd be careful. Wow, look at the size of the gap. 37. Well, it's gapping to the lower end of this monthly, but you know, things like that, you need more information. I don't know what it's going to do. T2 one, that's a nasty gap on T2. That looks like a long-term high now. Look, 116. Look, if you were in that as a core trade, I would be very, very concerned this morning. And look, you know, sometimes this buying or selling into earnings, they pay off. But guess what? I mean, this bar is amazing strength yesterday into earnings. So it looks like somebody thought they had inside information and now they're getting whacked. Every single person who bought yesterday and held is now, that's ugly. Let me put that over here. That would be a great call spread candidate on earnings. You know, we have the higher volatility, which I like. I can't, 77, that's a big old gap, but nothing to do with it. NLOC 1880, it's gapping after multiple up bars. That would be something if we were long to sell into. This was a very bullish close with the railroad track. Look at that, 20, 50, 200. That's a beautiful, and it all started with this pro gap over here. Wow. Ah, I'm going to put that in my, this coming Wednesday, MT Live. We're going to be talking about MT. We're going to be talking about topping and bottoming patterns of using MAs together that confirm it. And this is a beautiful example. So that's going in the, I'll grab a screenshot. Wow, hey, Greg, you should post that in the room. Here, look what Scott said here in from YouTube. Scott, good to hear, good to hear. We love, you know, we love people succeeding, learning. Someone's asking, what was the spread on Tesla? Tesla, we did yesterday. We did it on this 15-minute, we did it right here. We did it right in here. So it had a big W bottom. This is what we call a new low plus. Look, W, this is textbook. Textbook W bottom. And and you know, on Greg's charts, it says NL plus. That means new low a plus when it reverses. So I think we did it right in here on this bar is my best recollection. But to answer your question, we did the 690s, 690, 680 that expires today. There's no way I would have done anything on Tesla for next week. We just did a 1-day put spread. And even with the gap down today, it should be totally fine because we're making our theta decay overnight. But Tesla's a wild animal that it can move. So don't think I'm complacent. I'll be managing it like I do everything else. 61.42, gapping up. McGraw, nice put spread candidate here. ATVI. So let's keep an eye on that. Oh, Vert. It's gapping up but no entry. TMOS. Gapping up but no pattern. Same. SGen actually was a 1, 2, 3. And that, hey, McGraw, what pattern is this on the weekly? Anyone, quick. All right, we're out of time. This is a bull. Exactly, Gertz. That's a bull flag. Textbook. Textbook. Here's my flag pole. And remember we talked about the angle of the pole? And this, you know, we just eyeball it, but that's a beautiful angle. That's showing strength. And then we want like a 30-degree, you know, just eyeball it, trend channel. And if you would draw trend lines there and here, it's beautiful. So that, I'm going to keep it on the list for, oh, well, it's gapping down $6. All right, no. All right, my bad. I didn't see the pre-market. But still, the point was there on the weekly. Now it's a nasty gap under this bar. So it's damaged goods now. Just move on. Damaged. MTD 780. Nothing to do. We'll come back to you. Enta, nothing. MyGen 21. Ooh. Ooh. Now you see why we don't like trading bios. 22. That's whacked. And look how it collapsed yesterday on earnings. Just power selling, and this is a bearish tight consolidation. That's damaged. ACB marijuana stock, CEO resigning, I think, or whatever, and fired, whatever the case, and firing 500 people. Third nasty gap here, but it's a big gap. Oh, hey, Alex, I did see in the Wall Street Journal today that, yeah, it was ICE who was, hey, now ICE has a bullish gap up. Hey, we got to keep ICE on our McGraw put. Now it's a put spread idea. That's a bullish gap. But ICE, yeah, it was a ban that they wanted to buy eBay. What the heck is ICE doing with eBay? No, I know it's a mess, but that's the beauty of selling put spreads on messy patterns. So here's 88. We could even go a little higher based on this tail. The real body's at 90. Lima